Hey, good morning. Happy Friday, August 21st. This is Rick Mount with VIP Independent Mortgage bringing you this week's market update. Well, as usual, there's a lot going on in the economy today, so let's talk about rates really quick. Mortgage rates have improved this week slightly, but growing economic uncertainty in China, mixed bag of news here in the United States, kind of drives money into what they call the smart money moves over into bonds and mortgage-backed securities, and that helps keep our interest rates, specifically to mortgages, lower. So, what we've seen is a little bit of a downward trend in the interest rates. Not a huge one, but a little bit. So, Freddie Mac reports the average 30-year fixed rate just under 4%, with around 0.6 to 0.8 points and fees in there to get that rate, with the 15-year being down in the low 3% range, coming in right at around 3.15. So give you an idea. Government loans trading a little bit lower than that for the 30-year fixed, and jumbo loans have a much bigger variance depending on your credit score and whatnot, because that's more of a portfolio product. So what's driving this mortgage interest rate decline? Well, a lot of it's based on China. We're a global economy right now. China's factory capacity or factory efficiencies are at a 6.5-year low, and that's a leading indicator of kind of where things are headed. So if the factories aren't up and cranking out product, that's usually a early sign that things are going to be a little bit slower later. So that's kind of creating a little bit of a global fear on really where is the global economy at, and that's what's driving some of the market. That, and we got a mixed bag of news here in the United States. It's just not overwhelmingly great. There are some indexes that are great, and then there are others that are very lackluster. My 2 cents, it kind of feels like we're just waiting around for that big meeting on September 17th with the Federal Open Market Committee and Janet Yellen's press conference to see what she's going to say, what they think. Talk about having a lot of power. Boy, her statements can really drive the market one way or the other. So it feels like everybody's kind of holding their breath, waiting for that to happen. We'll see what happens. In other news, housing continues to be a hot topic. The July home sales outpaced market expectations and continue to show growth. Bloomberg reported here in California that the average median home price passed the $400,000 mark for the first time in 4 years. So continue to see some price appreciation. That always begs the question, hey, is there a bubble or no bubble? Well, according to a recent LA Times article where an economist did a lot of work to ditch dig, kind of drive through the numbers, we're in a really sustainable pattern. They look at a lot of things, they strip out inflation, they look at the cost of rent, they look at the cost to own and all those types of things, and they're saying that in fact the LA housing market specifically is not on the brink of collapse, that we're in a very healthy range in comparison to all those factors. So with that being said, we've got a shortage of inventory out there. Yes, a shortage of inventory. We need more homes for sale. That's really what's driving the price appreciation. So if you know of anybody that's thinking about selling their home, might be a good time to talk to that local great agent. If you need to know a better one, we got great introductions. But combined low interest rates, healthy housing market, stabilizing economy, home ownership is a great value today. So if we can help you understand what your buying power looks like, you just want to talk through your current options, let us know. We're here to help. Make it a great weekend. Stay safe. We'll see you next week.